Is trading really worth it? What nobody tells you. Most people who start trading lose money. Not because they are not smart, not because they did not try hard enough, not because the market is rigged against them, but because nobody told them the truth before they started. This video is that truth. Yes, trading is worth it. People make real money from trading. That is documented, that is real, and anyone who tells you it is impossible has simply not done it correctly. So yes, some traders are consistent, and they exist. And consistency in trading does not come from finding the right strategy. It comes from things almost nobody talks about at the beginning. A lot of people come into trading with a specific mindset, a very dangerous one. They want to give it everything. They want to focus completely full-time on trading. They feel like they have no other choice, or that trading is just a matter of time for them, or that they are built different from the people who failed. And honestly, all of that could be admirable in another field. But in trading, that exact mindset will make you miserable. Here is why. When trading becomes your only thing, your only income, your only identity, your only plan, every losing trade stops being information and starts being a threat. Every bad week feels like a failure of who you are. Every slow period makes you take trades you shouldn't take, hold position you should close, and risk more than you planned because the pressure of needing results is louder than any strategy. Trading does not reward desperation, it punishes it. The people who figure this out early save themselves years of pain. The ones who do not figure it out spend months and most likely years grinding in isolation, feeling more desperate by the week, and eventually walking away feeling like they wasted something important, which is their time. That is not the market's fault. That is just what happens when you put up high-pressured activity on top of an already pressured life and expect it to perform. So, what is the right approach? Trading works best when it is secondary. Not because it is unimportant, but because the moment you remove the financial pressure, everything changes. Your decisions get clearer, your patience improves, you start seeing things you generally couldn't see before, because your mind is no longer distracted by the fear of the outcome. You do not need to trade full-time to become good at this. You can swing trade, you can position trade, and you can even scalp or day trade during a specific window, a short window when you are available. The idea that trading requires your entire life is a myth, and it is one of the most damaging lies in the space. Do it alongside something else. Build something stable first, even if it's small. Then trade with money you can genuinely afford to learn with, not money your rent depends on. And if capital is a concern right now, there are legitimate ways to access funded accounts without risking your own savings. Those are called pro firms. They deserve their own video. I will talk about the bad ones, the good ones, and what you need to know about them. It will get its own video. Let's continue. Now, here is something that will feel wrong the first time you hear it. More effort does not equal more results in trading. In almost every area of life, the opposite is true. Work harder, you get further. Put in more hours, you produce more. That logic is so deeply built into how we think that even challenging it feels almost offensive. But trading is one of the only fields where doing less, waiting more, trading less, being still when everything in you wants to move is often the most correct and most profitable decision you can make. The market does not reward activity, it rewards patience and precision. Every trade you take has a cost. Every position has a fee. High-frequency trading in noisy market conditions does not give you more chances to win. It gives the market more chances to take from you, from exchanges to take fees from you. The traders who survive long-term are almost never the ones trading the most. They are the ones who learn to wait for the right moment, for the right setup, for the right conditions, and do nothing until all of that arrives. Now, the honest way to shorten the time it takes you to figure this out, it is screen time. And screen times matters. Watching price move, seeing your framework play out or fail, building a reference library in your mind of how markets behave, that is what builds actual skill. But screen time alone is not enough if it's disorganized. So you need an organized framework. I'm not here to give you signals, but to give you the most cleaner informations, to give you a way of seeing markets that you can develop and make your own strategies, your own framework based on that. Here is something I almost never hear discussed in trading channels, most of them. And I think it is the actual difference between traders who eventually figure this out and the ones who never do. And it is adaptability. Not just having a strategy, having a framework that moves with the market. Markets are not static. They cycle between conditions, trending periods, ranging periods, high volatility, low volatility, uptrending, downtrending, and all of those periods have different ways how they move. A strategy that works perfectly in one condition can absolutely destroy you in another. A strategy with rigid rules applied to a changing market will always break eventually. The traders who last are not the ones with the best strategy. They are the ones whose approach adapts, either because their framework and strategy is flexible enough to adjust, or because they have multiple approaches or strategies and know which one to use that fits the current condition. And adaptability does not stop at the chart. It means being open to new information, being humble enough to update what you think when the market tells you something different, not being attached to being right, not being attached to a specific strategy, to a specific person, to a specific market. And these are not just trading skills, they are life skills. And the traders who have them tend to be better at most things they do. But adaptability alone is not enough. It needs something to run on. And it is intuition. Real intuition in trading is not a feeling. It is not guessing. It is the accumulated result of deliberate, organized screen time, of watching your specific strategy play out across hundreds of situations, seeing how price behaves at these moments, and building a genuine pattern of recognition that eventually becomes automatic. It takes time. There is no shortcut. But it builds consistently and measurably. When you are not jumping from strategy to strategy, not restarting every few months, not being bombarded by all the new tools, noise, then you can build that intuition quickly. And while that intuition is building, risk management is what keeps you in the game long enough to develop it. You will be wrong a lot of time, and that's part of trading. The question is not whether you lose, it is how much you lose when you do. And you need to control that. And that is risk management, and it buys yourself the time and the experience to actually get good at this without losing money. The noise in this space is infinite. There is new strategies every week, new systems. All of it is designed, whether intentionally or not, to keep you searching instead of building. Please find something simple. Something that makes sense to you, something you can apply consistently and learn from. Build on it, refine it, let your experience shape it over time. That is the path, not the most exciting one, but the one that actually works. So make it simple, make it adaptable, trust your intuition, manage your risk, and then, for sure, trading will be worth it, consistent, and protected. The next videos go deeper into each of these, into how to actually read markets without the noise, into the specific moments worth paying attention to, into what risk management actually means in practice, about prop firms, about probabilities in the market, and how to use them to refine your strategy. and much more. If you like this video, please subscribe and leave a like and leave a comment below that, a nice comment. This was the No Noise Analyst. You can call me Analyst. Thank you for watching. See you in the next one.